How do I keep this thing floating? There we go. All right, let's do this. 2024, look back. Man, look at this doofus. Not so smart, were you, Ted? It's January 1st, 2024. Happy New Year. I got a new computer, so hopefully this will look a little bit better. I think this is 1080p versus whatever that old technology crap was last year. All right, 2024, going into it, I don't have any sort of predictions for 2024. I'm actually going to reuse the predictions I made in 2023 for 2024 because, as a lot of people know who know me, I'm usually very early in my calls. So I'm just going to have it carry over. Also, I'm going to carry over a previous call that I made for the stock, which I believe was Google, for 2022 to 2023. I'm going to carry it again to 2024 as a top pick for a stock. And I'm going to just continue everything that I said last year. I connected the two, labor markets to a recession. I thought labor markets were going to be in that 4.5–5% unemployment rate. That did not happen. I think right now it's like 3.7% unemployment. So I did say something correct though. I tied the two together, the labor markets and the recession. I thought that there was going to be a recession that was going to happen sometime in the second half of last year, 2023. That did not happen. However, I did say that the two were tied. So even though unemployment rate is at 3.7, like I said, I was saying if it did shoot up to 4.5–5%, then a recession would ensue. I also said at the beginning of the year that there's about 1.7 jobs available per available person looking for a job, and it actually spiked up to 2.0, meaning like there was 2 jobs available for each person trying to look for a job. So obviously with those types of numbers, you're not going to spark a recession because everybody's got a job. If everyone's got a job, everyone's going to keep on spending money on the things that they love to do. So I think a lot of it really just had to do with the whole idea of the issues that we had with goods being shipped from overseas to here, and that caused a bunch of inflation because there just wasn't enough stock available for all the demand that was coming from all those stimmy checks from all those years ago. It feels like, man, COVID sounds like something that was done like 10 years ago. It's kind of crazy. But let's go through all these. I did say that people in the market were expecting an immediate pivot in the Fed rate, and I said that that was not going to happen, and it was going to be higher for longer, and just listen to Jay Powell, and that was the big mantra for the year, the higher for longer. And I also predicted 5 to 5.5% Fed funds rate. I think I nailed that. It's like right now at 5.25 to 5.5, so that was perfect. I said inflation's not going to hit the 2% goal that the Fed and the market was looking for this year. That was definitely against the grain for a lot of the economists in the market. So I got that one right. I said commercial real estate was not going to have a good year. That is obviously the case, but now it's spread from just call it commercial office buildings to multifamily. So apartments are getting hit. You're also seeing a decrease in the rent growth that has helped a lot of the prior multifamily developments in the past. Sorry, that's my dishwasher going on right now. And what else? I said that there's going to be more defaults and foreclosures. I think that's going to carry over into 2024. So again, hit that right. Economy being flat, that was not the case. It's really amazing how strong the economy, the American economy, the U.S. economy versus all these other economies around the world is just so resilient. So never ever underestimate the power of the U.S. economy. I did tie it to the labor markets, so I'm going to actually carry that again through 2024. If there is a recession, it's going to be a mild one, and it's all contingent on the labor markets. So I'm going to stick with what I said before. If we are in a 4.5 to 5% unemployment rate, and that 1.7 JOLTS number that I mentioned before comes down to like 1.3, then I actually think that there could be a recession in the second half of this year, 2024. I said here earnings are going to fall. Forward-looking earnings is going to fall. I'm going to stick with that. I'm going to continue on that trade. Also, I said that the VIX is going to spike over 35. I believe that actually I hit that. I actually made an options trade on that prediction in the middle of the year, and then made a ton of money and then sold it. So that actually worked out great. So that did happen. I don't know if it went over 35. You know what? I gotta check. I'm really curious. So the fix right now is 12.45, which is amazing. It actually hit 26.5. So not quite 35. So I'm going to say that I missed that one, but it did spike up quite a bit. And that was in March of 2023. I think I started buying VIX puts around August when it was around 16 or so, and then it spiked up to about 21 and a half, and I remember selling those puts near the top. So that was a really nice trade. Other predictions I made from 2020 for 2023 was inflation continuing to drop to 3 to 4%. I actually nailed that perfectly. I said it was going to be stagflation. Again, I'm going to carry that to 2024. I said dollar is going to drop in value. Again, I'm going to pull that forward to 2024. Gold and silver, I think they did great, and I'm going to continue to hold them and accumulate those two. Gold or GLD at the end of last year was like 169.6. Now it's 191. That's like over a 12% gain. So that was obviously a really good investment. And then I just held all my dollars in cash. So the short-term treasury bonds, I was yielding anywhere from 5 to 6%. And I also bought a bunch of long-term, well, not long-term, but more mid-term bonds at the 10-year mark. And so that 10-year tenor did extremely well for 2023, especially at the end of the year when I bought it close to 5% yield, and it was easily a 20+% gain. It's probably more than that now because I think it's like down to like 3.8 or so, which is essentially where the Treasury, 10-year Treasury was at the beginning of the year. So it just spiked up. I actually think it's a little bit low. I think that treasuries, 10-year treasuries should be a bit higher than they are now. I was thinking that they should be anchored around 4%, but we'll see how it turns out and see whether or not that recession actually happens for 2024. But again, pulling that all forward. So continue thinking that there's going to be a soft recession. This soft landing is a really hard thread, but the Fed has just been doing a phenomenal job. Jay Powell has just a great grip. I think the only thing they have to worry about is some political blowback, when it comes to the 2024 president election, because as we all know, the economy has quite a bit of a sway over the elections. I think that's about it. Yeah, so those are all my predictions for 2024. Good luck, everybody out there. It's going to be a great one.